Saxena, Managing Director and CEO with Sphoorty Financial. Shalabh, good morning. Thank you for joining us. I want to start with a very basic question. FY23 has been a good year for microfinance industry. Is that largely because of base? And if that is not the base, do you think this momentum will sustain?
So good morning, Nikunj, and to all your viewers. FY23 in the wake of the COVID impact of almost 2 years. So to that extent, it's been a relief and it has, we've seen good growth rates across the industry. So that's number one. Is it sustainable? That's the question, or that's the crux of the question. I would hazard a guess and I would say yes. And the reason is as follows. We are still, as an industry, under-penetrated, probably about 40% of the addressable population. That's number one. Number two is with the improving infrastructure across the country, the distances are shrinking, and hence what happens is that the markets for our customers, which are rural and deep rural, they have access to the nearby markets, and that kind of helps us, and hence the income levels of our customers are going up. So from a credit demand point of view, it is going up. They want more and more, and this is the new aspirational India that we are experiencing. From an inflation point of view, I would say, and I made this point earlier also here in the show, a food inflation for our customer, given the fact that this is the bottom of the pyramid, is always good, and it kind of benefits them. So is this just temporary? I would say that about 18 to 20% growth at an industry level for the next 2 years, assuming nothing surprising to happen, is very much possible.
ROA at Spandana is at about 4.5%, even though your cost of borrowing and cost of lending is higher. And given that you are lending to the bottom of the pyramid, borrowers, at what point in time this kind of an high borrowing runs into some kind of an risk?
So there are two parts to this whole question. One is the customer profile and how much can they afford. That is one. And two is as an enterprise, how cautious are you in terms of being prudent about the lending limits? So let me address the first part. The affordability, which is a factor of how closer you are to the market and how timely can you provide the credit, is extremely critical. Nikunj, the loans that we give are very short loans, about 30,000, 35,000, 40,000 for a period of 2 years. So from a customer point of view, difference of 20 rupees, 30 rupees here and there, provided the credit is in time, and it kind of flows in when she wants, is very critical. If that happens, the interest rate, while it is a factor, and as a prudent lender, it is very important that we are cautious of not to tip over and make it affordable for her and for us both. That's what all of us take care. On behalf of Spandana, we are very, very clear that we will go only as much. We obviously are trying to reduce the cost of funds, which over the years, over the past 2 quarters, it's kind of been on a pause. And hopefully, if all goes well, it should either remain stable or probably go down. We have to move accordingly to ensure that you operate within a range on the NIMS part, and at the same time make it affordable from a customer point of view. So affordability is a key. Timely delivery of credit is very important, and that's what we as an enterprise kind of do it. From a risk point of view, which is the second part, I think very critical that we are, as a prudent lender, we do not go overboard. We do not give what the customer wants, but have an engaged discussion with the customer and ensure that she's at a demand at a reasonable level where she's able to repay her debts. So that's the overall philosophy. It's a longish discussion, but broadly speaking, affordability is the driver, and prudent lender, hence muted ticket sizes or rational and prudent ticket sizes is the key.
Shalabh, let me address the overhang for the stock, that is Padmaja Reddy's remaining or residual stake in the company. So whatever happens to her stake, will that be an independent transaction, or in this case, you as a professional and Kedara as an investee company, will they be involved in the stake sale?
So, I have, so there are two parts to the answer. One is it is for her to really answer, what she does with her stake, and she's gone public in terms of expressing her desire. As far as we are concerned, Nikunj, and obviously I can't speak on behalf of Kedara, but as far as the professional management which is running the show here is concerned, it's been a year that we've been slightly more than a year, about 5 quarters that we've been around. When we presented the 25 document, Vision 25 document to the market, and it's a public document. We said that end of FY25, we will have a 15,000 crores of microfinance book and a 3,000 crores of the non-microfinance book, which is essentially LAP and MSME. The entire board at that time, without exception, had bought into the plan, and we continue to execute the plan. So we are on track. In fact, we are slightly ahead of the plan, and we are fairly confident as a management team that we'll deliver whatever we had expressed our desire from a company and an enterprise point of view by end of FY25. So we are very much focused on that. The others, be it a Kedara or Padmaja, so it's their call, to be very honest.
My spirit of the question perhaps is that because NBFCs and banks, ultimately they will be needing capital to grow their business, and they've resorted, in NBFCs and banks, they also go to equity market. So in this case, the underlying supply and the stock price becomes important. So that is something which I want you to understand, that if there is constant supply which is coming from one end, then does that restrict your ability to raise more capital via the equity market route for future growth?
So capital, when we came out with our plan, Nikunj, until FY25, we are at about 36% CRAR. And I think even if we were to conclude our plan FY25 with 18,000, we'll still be at a 24, 25 or thereabouts. At this point in time, at least for the conclusion of the plan, we would not really need a capital infusion. Obviously, a growth capital is always welcome, and if at all once we hit those limits, we'll kind of figure out, if we kind of get it. But purely from running a company point of view, a capital requirement not on the cards. It is just that, at a point in time, if we have to take a call, it will be more from a growth perspective rather than anything else. So, so that's what we are that's the plan that we have.
Go back to the big picture, Shalabh, what you've shared with us. You are clearly of the view that FY23 and FY24 are going to be high growth years for your company and for the sector. And irrespective that we have an election cycle and we have a state cycle coming in very large states, it's not going to be a disruptive factor.
That's correct. Because what happens, Nikunj, and it's a very, very important question that you've asked. The microfinance industry is about a 2-decade-old industry, and it's come a long way from being in the infant stage to a very matured industry as it is now. It's almost a 360, 370,000 crore industry. If I look just at the joint liability group, and if I include the SHG, it is almost a 6 lakh crore industry. So from a maturity point of view, the pillars of the industry is dependent. I mean, if you at the pillars, you have a political establishment, you have administration, you have judiciary, you have employee, and you have customer. All these 5 pillars over the past 2 decades have kind of matured to a stage where everybody knows that, this is one industry which provides the last mile delivery, number one. Number two, affordable rates is the key. Number three, the credit comes when the customer needs. And hence, even though it is the bottom of the pyramid, what is very clear is the entire ecosystem has kind of matured to understand that, a minor disruption here and there. And we are not talking of the COVID or a demonetization type of event. We are more or less there, and that's our personal experience also, Nikunj, that over the past, but for the COVID, minor disruptions like a cyclone or a flood, these kind of things are taken care of. The market kind of adjusts to it, and it's able to hold itself to a stage where, a minor, you could have a disruption for about 10, 15, 20 days, but otherwise, as an industry and as a company, we are fine.
Well,
so should not be is the answer to your question. Are we worried? We are cautious. Do we anticipate a lot of issues? Because there have been multiple elections. This is not the first election, both state election as well as the national election. We've largely at an industry and at an enterprise level, we've been fairly fine.
Good to have you on the show. We'll let you go on that note. Great to speak with you today. We'll